Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Juanita Archuleta and I work here on the NinjaTrader Ecosystem team in the Denver office. We have a very special event for you today with Reza of ProfileTraders. I would like to mention it is important to understand that there are substantial risks in trading commodity futures, contracts, and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker. It can even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure, or if you have any questions regarding that disclosure. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions for the NinjaTrader brokerage should be sent directly to our brokerage team using the following phone number or email address. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive of events to review. Also, if you are active on social media, we do ask that you follow us on Twitter and Facebook for all things related to NinjaTrader ecosystem. NinjaTrader is free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and to pick up a free live data trial, please use the following link. You are also welcome to purchase or lease NinjaTrader using the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars using the following link. We are very excited for this unique event in which Reza will teach us the basics of market profile analysis using value and TPO charting. Thank you again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader room. Go ahead and take it away, Reza.
Hi everybody. Let me start by thanking everyone for your participation and NinjaTraders for hosting the event. The subject of today's webinar will be market profile trading. And the main thing about market profile is to distinguish between price versus value. The length of the webinar is about 30 minutes, so I will cover all the essentials without going too much into the details. And at the end of the 30 minutes, we're going to have a Q&A session where you can ask the questions that you may have. So let me start by going into the presentation first page. What is price and what is value? Most of us, when we trade, we are mainly focused on price. And price is a fixed amount assigned to a unit of good or a service. The price that we can pay can be low, fair, or high in relationship to the worth of the good or service. If we are not aware of value and mainly focus on price, we can at times, as a buyer, overpay, or as a seller, we could sell too cheap during the transaction. On the other hand, value is a range of price that is assigned to a unit of good or service considered to be fair by market participants. If you're aware of value, you can then identify when price is undervalued, fairly valued, or overvalued. So knowledge of valuation will allow you as a buyer to take advantage of undervalued price opportunities and avoid overvalued price conditions. As a seller, knowledge of value will avoid selling when price is undervalued and take advantage of overvalued market condition. 1 second, please. Am I supposed to do something? I was told that the sound is okay.
Reza, you're coming through loud and clear. I'll go ahead and help Willie as well as uh, anyone else who's complaining of any issues. You're doing fine though. Go ahead.
Okay, perfect. Thank you. Now the dilemma of being able to identify valuation, we have to use what you call the statistical bell curve. And we have to distribute the transaction at price inside a bell curve, where in here you have all the price, and on the other side quantities at which each transaction at price took place. So if we look at the middle of the bell curve, this is where most of the transaction takes place. And then as we go further up and price becomes too expensive, there is less transactions. And as we come down and price gets too cheap as well, there is less transaction taking place, therefore giving us a picture of what is fair valuation, what is overvalued, and what is undervalued. So basically, for the purpose of market profile trading, the value area that we use is within the standard deviation number 1, where inside the chart 70% of all the transactions will take place. If we pass on the upper band of the value bracket, price will be considered as overvalued, and if we come down at the bottom part of the bracket of the standard deviation number 1, price will become undervalued. Now the question is that how can we fit market data in a way that it would go inside the bell curve? Because if you use a candle or a bar chart or any other traditional chart, price doesn't develop vertically, it develops horizontally. So we have to find a way to distribute the market data we get into the statistical bell curve. In order to do so, we are using what's called the TPO chart. Each half an hour starting from the open is assigned a letter. So assuming we are talking about, for example, S&P E-mini futures, which starts at 9:30, from the moment that the market opens at 9:30 to 10 o'clock, the letter A is assigned to that time bracket. And instead of developing sideways, as price goes up and down, a letter is printed on the chart, but vertically. For example, if we open at 28.36 and we go to 28.37, 28.38, each letter is printed as price would go on the upper part. And then if it starts to come down, as it will fluctuate, new letters are putting on the chart until the time bracket is over, and when the next half hour starts, another period starts with a different letter, in this case B, and so on and so forth. And if we combine all these letters together, to the very right, you have a finished product. And now with this distribution of price for that given session, we have a bell curve in hand. And now that we have a bell curve in hand, we can establish what the value area has been for this session. Now I have assigned the software to bracket for me where 70% of all the transactions took place for that given session. And it gives me now my value bracket. And when we are looking at value, these are the main points that we need to be aware of. First, value area contains 70% of all the transactions within that given session. Value area is defined by two important reference points: upper value, which is the upper bracket, and lower value. I'm sorry, I forgot my pointer. And lower value, which is the lower part of the bracket. Why do we need to be aware of this? Because these are a very important reference point as support resistance, as we will see later on. The main value area that we are concerned with when the day starts is the one from the previous session, because the previous session value has been established, the session is closed, and we know what we are looking for. The developing day, until later in the afternoon, we cannot rely much on the value area because it is still developing. When analyzing value area, there are a couple of things that you need to look for. If, for example, the market is going up, making higher high, higher low, you want to make sure that value area also is shifting higher. You want to be aware of the range of the value area. As the market goes up and as the market comes down, you want to make sure that the value area range is expanding as it goes up and down. If the market is starting to go up, but you start to see shrinkage of the range of the value area, you want to start to ask yourself the question, why is it that all of a sudden, as the market is going up, value area range is no more expanding? So the direction of how value area is going, the width of the value area, is it expanding, is it contracting? These are all things that we are looking at when analyzing value area. And then lastly, once the session is closed, always we look at the closing price in relationship to the value area. If in this case value area has shifted up and the close where that little asterisk is closed at the high of the day, it is all looking pretty positive. If I would have a scenario where value area would have shifted higher but my close would have been at the very low of the session, then I would be a little bit cautious as of why is it that value has shifted higher but price ended up closing at the bottom of the session. Now what else can we extract from this bell curve that we have in hand? Next very important item is called point of control, or POC. That is the blue line where most of the transactions took place. It is the line that is containing the most amount of letter. The more developed this line is, the more significant level of support resistance it becomes. The less developed it is, obviously the less significant it will become. Usually when you are dealing with a rotational market, price has a very big tendency to return to the POC, meaning that if we are within a stage of rotation and price goes up to the top of the rotation and stops and starts to come back down, most time it comes to the POC for a retest, and if the POC doesn't provides support, then it rotates to the other side of it. And it's also a very, very important future support resistance from the previous session and other sessions that would be either above or below that would have a point of control that we call a naked point of control. For example, in this case, the previous session's point of control has been tested by this session to the right. Therefore, that POC is not a naked POC, but take a case where the session to the right would be still on the upper part of that POC. In this case, the POC line would extend to the right, and until a letter from the developing session would have come and touched it, that POC would have considered naked. Now, if the value areas are overlapping, meaning that instead of pushing up or pushing down, the POCs, the value areas would be sitting all inside each other, we would be looking at the direction of POC to take clue as the health of the direction of the market. Now, next point. When we are looking at the profile, we always look at the bottom or the top part. If the bottom part or the top part contains rejection meaning that you start to see single letters. If it's at the very bottom part of the profile, that is considered a buying tail. If at the very top of the profile, it is considered a selling tail. Buying tail and selling tail are nothing but rejections. And why are they important? They are important because if the top or the bottom contains a buying tail or a selling tail indicating that there was competition for price at that level, usually it's a sign that that bottom containing a tail is a solid bottom, and if a top contains a tail, it tells you that it is a solid top. If you're looking at the profile to the right and we look at the top and the top does not contain a tail, a rejection to the downside, oftentimes those tops have a tendency to be visited and violated during the developing day. So the tails are important indication telling us if the top or the bottom of the developing profile has a good chance to hold during the day or not. To have a tail in place, we need a minimum of 2 TPOs, meaning 2 letters. The longer, the better. Minus development areas. It's more or less the same concept except that it happens in the middle of the profile, not at the very end or at the very top. It happens in the middle. And it's a footprint of fast moving price leaving behind thin areas of price development. Single TPOs within the structure of the profile and sometimes double TPOs. So if I look at the middles here, I can see singles here, that's minus development. I look at the middle here, I can see single and doubles, that is also minus development. Why are they important? Because when they do happen during the developing day and it shows on your profile, usually price has a tendency to come and visit those areas. And if the areas where the minus development is shown is not defended, there is a tendency for price to come and retrace through them. And why so? Very simply, because if you want to end up with a balanced profile, you will have to fill over the areas that are missing in order to get a profile that is balanced. Now, if the retest of these minus developments are defended, if it's on the upside by the buyers, or if it's on the downside by the sellers, therefore it is telling you that you are dealing with a very strong direction all day, and from the area where the minus development is, then you're going to rotate back up again. So why are they good to be aware of them? Because as I said, once price visit them and you start to see that it is not defended, it gives a good opportunity to look for price to go trade over the areas of minus development in order to fill and balance the profile. The wider the area of minus development, the more relevant it becomes. And again, I am covering the parts that you will be looking at profiles that if you recognize, you can take advantage of it. Obviously, I'm not trying to explain all the details of how to trade these and everything that covers market profile. So I know somebody said it's very academic, but that's how it is. I'm telling you what the main important things are when you look at the market profile chart without going into big details. Next element when we look at market profile is the shape of the profile. When you start to see a profile that has the shape of a D letter, that is when the market is in a state of balance. And it usually, in a balanced market, you are in a state of rotation. And as you rotate back and forth, filling inside the profile, you develop a D shape. This rotation will go on and on and on and on until price decides to exit out of the rotation. And usually when price exits out of the rotation, it then goes for the next leg of direction. During rotational market, the high and the low of the profile will be tested several times without ever breaking. So once you start to see a developed profile that is very rotational, don't be too much in a rush to break or to look for breakouts every time it comes to the top, because as I said, it has a tendency to test the top and the bottom several times during the process of the rotation. The longer the rotation, the more important future support and resistance it becomes. The appropriate trading strategy during rotational market is to be responsive and trade from the extremes of the established rotation, meaning that when price gets over the value area, that would be an opportunity for a potential sell. If price comes below the rotation under the value area, that would be an area of support for a potential buy, and each time it will rotate to the middle and then possibly to the other side of the rotation. That's one of the shapes that you will encounter. Next shape is what's called a P shape. P shape, usually what happens is market starts with a rotational with a directional leg. Price moves fast and furious, and as a result of moving fast and furious, you have very little development inside the profile, and then it reaches a point where it starts to go rotational. And when we look at the shape, it's showing us similarity to the letter P. Why do we care? We care because we want to ask now ourselves, is this directional move that ended with a rotation at the top, is it going to continue by further breaking up, or is this a done deal? The buyer that created the move is no longer active, selling is coming in, therefore a rotation starting at the top. So what I want to immediately do is to box the rotational part of this P shape. And if I start to see that price suddenly is starting to break the bottom part of the P shape, I want to be a little bit worried, because that tells me that in order to balance this profile, price could now start to come and trade into these areas of underdeveloped part of the profile and create a more balanced shape kind of a structure. And on the other hand, if it starts to break up and exit to the upside while leaving the directional part intact, then you have to be a bit aware that it starts to exit out of this rotation, and those buyers that created the P shape are in control, and now a second directional leg to the upside is about to start after this rotation has become mature enough to exit to the upside. Now the reverse is what you call a B shape. It starts with the rotational or with the directional push to the downside, and then we reach a point where the push to the downside, it starts to find support, and a rotation at the bottom starts. Same deal. What we want to know is to box the boundaries of our rotation, the rotation high, the rotation low. If price starts to come and break to the upside past the rotation top, we want to be aware that it could then start to attack the areas that are underdeveloped in order to balance the profile. And if on the other hand it breaks to the downside and it starts to exit down off of this rotation while leaving the directional push to the downside intact, we want to be careful that there will be continuation on the way down as a result of exiting the rotational part of the B shape. If possible, allow me to finish the presentation and I will take all your questions at the end. Now what we are going to look at is a profile of a trend day. Trend day, usually you start with a very, very strong first bracket. How do we know it's a very strong first bracket? Because we look at the location of the open, and vast majority of the transactions are in one side of the open, and the open holds a extreme. If it's on the upside, I would say it would hold the extreme low if it's on the upside or an uptrend, and it would hold the extreme high if it's on a downtrend. So the moves start with the directional drive right off the open, no hesitation, no waste of time. The buyers are in charge and you can definitely see it. It keeps on driving in one side without much of a retracement. Oftentimes, it happens when market is influenced by an outside event, a news, a catastrophic event, you name it, it's anyway not market related, but it's outside event related. Pullbacks are very short-lived and market moves fast. Every time market moves fast, your profile will be very tiny and underdeveloped, because logically, if it moves fast, it doesn't spend much time going back and forth and developing sideways. Shape of the profile is long and skinny. And oftentimes, your first 3 time brackets all move in the same direction, meaning that you get a push with A, then B will break the high of A, it's a must, then C will break the high of B, and the first 3 brackets all make higher high, higher low if it's on an uptrend, lower high, lower low if it's on a downtrend. Appropriate trading strategy during trend day is to join the move as soon and as early as possible. Otherwise, you risk to be left behind and you do not want to fight trend days. Now the next topic I will cover are the different types of opening. The most potent and important one is called an open drive. Open drive means that right from the open, market drives directionally up or down. Often when you look at the position of the open, it holds the extreme high or the extreme low of a period bracket. So in this case, where the blue circle is, that's the open, and when I look at my A period, clearly the low of the day is where the open was, and the vast majority of the transactions are past the open. That is called an open drive. Usually when they do happen, they give you a clue and indication that you are dealing with a potential directional day. This scenario where you start to get an open drive and they are strongly buying and buying and buying and buying, and all of a sudden something happens, and either within the A period or within B period, we come down and break the low and reverse this open drive. You need to be very, very aware of these situations because they can create a pretty nasty counter reaction to the initial drive that we saw. Because logically, when you have an open drive, there is very strong buying coming into the market and nobody expects that the low would break. And if all of a sudden this whole deal is reversed and we come and break the low, the counter reaction to that could be quite severe, and oftentimes what you will see is an equal amount of length that you have in place with the open drive in one side being duplicated on the other side when you reverse the open drive. Trading strategy is to go with the direction of the open drive as early as possible. Now you're going to tell me what is as early as possible. You will, or you can use what is called a opening range, meaning that you set a time for yourself, 5 minutes or 10 minutes from the open, and whatever that 5 minutes or 10 minutes bracket will give you, and you start to see that that bracket is exiting with an open drive, that would be the earliest way of joining an open drive. But again, I'm not going to go too much into the details right now. I want you to be aware of what an open drive is when you see it. Now the second type of open that you will encounter often is called an open test drive. This one is a little bit easier to take advantage of. What it does is that initially you open and it starts to go, for example, in this case, up. And then suddenly it stops. In this case, it stopped exactly at the top part of this previous rotation. And then as it stops, it comes down and crosses through the open, in this case to the downside. And once the open is crossed, you get then a drive on the opposite side. When you look at the finished bracket, you have some TPOs in one side where it did the test, but the vast majority of the TPOs are on the other side where the drive took place when the open was crossed. The trading strategy with this one is a little bit easier. You wait for the test. If the test fails and then it starts to return through the open, the cross of the open, that would be the place to enter the trade, and the top of A period will be the stop placement. It's a bit easier than the open drive because the open drive just starts and like a racehorse, it flies in one direction. This one gives you a visual alert where it tests, and second, when it crosses through the open, confirms the failure of that test. These are the two main things to look for when you see an open test drive. And finally, what we call an open auction, and that one is my least favorite, is when you open and instead of getting an open drive or getting an open test drive, you open, you go up a little bit, come back, cross through the open, go down a little bit, go back up again, cross the open, go up a little bit. Basically, you cross back and forth through the open several times from the open, and that right there is indication that you are dealing with a very either quiet or possibly rotational market, because the open is the most dynamic time of the day where money commit. They either commit on the buy side or either commit on the sell side, and you want to see at least the most dynamic price fluctuation of the open. If right off the open nothing is happening, then you want to ask yourself what's going on. And usually what's going on is that you are dealing with a very tight range rotational back and forth market. How do we know that it's an open auction? When I look at the position of the open, I can see that it's very much so in the middle of the A period range. And the reason why it ends up being the middle of A period range is because multiple times you have crossed back and forth through the open and nobody was able to set the tone, and the result is that open ends up the middle of the range. So in this case you have equal amount of TPOs above and below the open, and it indicates rotational session developing. The trading strategy for this is to avoid early trading until more visibility is provided. So I pretty much covered what I wanted to talk about for the essentials of market profile trading. Before I go to this, I will take all your questions now. So one question is that, let me answer Judy Wu, please. Why would we use market profile when it is visually the same as the volume profile included in NinjaTrader lifetime license, both showing the same price, value distribution, shape? Well, number one, if you use volume profile, you're relying on volume and you're not basically using TPOs. If you look at the volume profile, you will see that your value areas will be different. You will not be able to see buying tail, selling tail. You will not be able to see minus development areas. You will not be able to see the type of open you are getting. Is it open drive? Is it open test drive? Is it open auction? All the things that I covered in here, you certainly will not be able to get all of them through a candlestick chart with a value, with a volume profile next to it. Richard, do the box with letters show up together when price charts, or they use their own separate chart? The box letters. Which boxes with letters? Are you talking about value areas, or you're talking about the letters? Well, in order to get these charts going on, you will have to get a software that is able to plot TPOs. The vendor that I am using, and I have all the chart template, is the Fin algorithmic. With the Fin algorithmic, once you have that added to your Ninja, you will be able to plot any kind of a market with the letters, which are the TPOs. It will box for you the value areas. It will box for, or it will plot for you the point of control. It will plot for you the open so that you know what type of an open you're dealing with, etc., etc. I am not aware nor knowledgeable with other softwares. The one that I am familiar with, and I know that it works extremely well with the way I use it, is the one offered by Fin Algorithmic. Do they have to be 30 minutes chart? Yes. Each bracket needs to be 30 minutes, not 10 minutes, not 5 minutes, not 60 minutes. Of course, you can do whatever you want, but the traditional teaching says that each time bracket has to be 30 minutes. And each session needs to start when the day session opens. That means you need to separate. If you are dealing with the futures, for example, if you are dealing with the ES, or if you are dealing with the NQ or YM, you need to separate the overnight from the day session, meaning at 9:30 your day profile starts brand new, separated from the overnight, and then behind the overnight you would have the previous day. For Judy W, I just answered this. Any 24-hour session, you need to subdivide the day session from the night session. Is there a key or means platform on a piece of paper? I am not sure if I understand that one. Ron said so we could interpret information quickly. Certainly it will help you to see what's going on in the market quite quickly and quite accurately. BBM, most market runs 24 hours. I answered that question. Yes, You need to separate the overnight from the day session. Will it work on NinjaTrader 8? If you get Fin algorithmic add-on, it will absolutely work. Jerry G, what insight do you provide in your trading room? In the trading room on a daily basis from the start, we analyze the markets, especially CL, ES, and two forexes in detail. Analyze it, strategize it, and as the day goes, we analyze it, find trade opportunities, and take advantage of the trade opportunities. And it's also a place where all the participants have an opportunity to interact with me on a daily basis and learn, and if they have questions, have their questions answered. Do you use footprint chart? I do not. Fin algorithmic is the software that allows you to plot the market profile TPO charts. You will have to have your data provided in order to be able to plot the chart. So they are not data provider, they are provider of a software that allows you to plot the profile charts. The price, I believe it's a $280 one-time fee. So basically, what you can get in here, I have 3 courses that are covering in detail all the aspects of the market profile. One course is the market profile bootcamp. The other course is the advanced market profile. Third one is the market profile application for day trading, and then you get 6 months membership to my live trading room for a discounted price of $275. That's the link if you want to proceed and get advantage of the deal. For market profile charting, you need to log in to finalgorithmic.com and go over a package that they have called, let me quickly check for you. They have a package called TPO and volume profile chart, and it says purchase now for $289, and it's a one-time fee. What in my room, all the charts are displayed. So one has a choice to follow the market through my trading room and not have any chart of their on their own. What TPO letters mean? TPO letters means time price opportunity. It's simply when price fluctuate, instead of having a candle chart or a bar chart, it is plotted through those letters, and those letters are called TPO, time price opportunities.
Hey, Reza. We're
Yes.
running a little bit out of time here, and we're going to have to get closing out the room. Do you want to provide your contact information for any questions that people could not get to?
Absolutely. You can go to ProfileTraders.com, and there is a contact over there if you need to contact me, and I'll be more than happy to answer any other questions that you may have. Since we are reaching our time limit here, I hope that you enjoyed the presentation. Thank you for your participation, and maybe our path will cross again in the future. Thank you, Juanita. Thank you, NinjaTrader, and to the next one.
Thank you so much, Reza. I did put the contact link in the room if anybody wants to reach out to Reza and ask any more questions or reach out to him to take advantage of this special offer. I want to give you a special thank you to ProfileTraders for joining us today and having such a great presentation. Everyone in attendance here will receive an on-demand recording of today's event, so please keep an eye out for that in email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as an added value service for our clients. If you do find value in these events, we hope that you will attend them on a weekly basis. We would like to remind you that the information provided in this was that of ProfileTraders and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time you spend with us, and we hope to see you in future webinars. Have a great day, everybody, and happy trading from everyone here at NinjaTrader. Thank you again, Reza. Have a good day.